Peace and blessings. Welcome to my channel. My name is Taj Yutsi and I am a certified financial coach. I am also the founder of TRU Financial Coaching, where our mission here is to educate, enlighten, and equip individuals with the financial literacy that is needed in order to get off of the rat wheel. What is the rat wheel? The rat wheel is when one is constantly financing things that go down in value for them, but up in value for the banks at the same time. The wheel is only powered as long as the rat is in motion. So, when one is constantly financing depreciating objects, then they continue to keep that wheel in motion. It's not until one wakes up, decides to create a plan to get off of the rat wheel and implement that plan consistently, then they allow themselves or give themselves a chance to become free to do what they want when they want, instead of having to do the things that they don't want. Today's video is the part 2 of the financial seminar that was held in Baltimore, Maryland on May 3rd. And in this part, we discussed the different types of debt: secured debt and unsecured debt. We hope that this video will be helpful to those individuals that are on their journey to achieving debt freedom and financial peace. Once again, I would like to thank the Baltimore location and Rosalind Reed for organizing this event to make this possible. So, at this time, we hope that you enjoy part 2 of the financial seminar held in Baltimore, Maryland.
Have to, all right? And then lastly, debt not only robs one of money, but it robs you of time. And I think above anything, that's most important, right? Because money, you can always get more money, right? But time, you can never get that back. Once that time is gone, that's it. And because you're constantly financing, when people constantly finance things, they're not just giving money, but they're giving their time, right? I mean, I know cases where people, they want to retire, but they can't because of debt. So this is something to think about. And again, like I said, with my personal journey, once I got out of debt, except for my mortgage, like back in 2023 was when I became completely debt-free except for my mortgage, I was able to take a sabbatical. And with the sabbatical, that I took a whole year off of work, a whole year. And I was getting paid half of my salary. And I was all right. I had no financial worries, and I'm not rich. I'm far from it. I'm not a millionaire, right? I don't have a net worth of $500,000. I'm just a regular guy, right? I just don't have any debt. And that's it. Life is not expensive, but we make life expensive because we constantly finance things. I mean, just think about when we were 18, 19, right? Life was easy, it seemed, right? Right? Because we didn't have any, they had nothing. We worked, did what we want. We got tired of a job, we quit the job. Why? It wasn't because we were young, it was because we didn't have any debt. And that's it. Life is not expensive. So like I said, I was living off half my salary and no problems whatsoever. All right. All right. So there are different types of debt. First debt, secured debt. All right. And secured debt would be any debt that is backed by an asset for collateral purposes. And an example with that would be a car loan, right? Mortgages, home equity loans, and secured credit cards. So a mortgage is debt, right? Mortgage is debt. Right? And one thing that I always thought about even before I started my journey, but I remember like many years ago, like filling out forms for whatever, maybe credit or whatever, whatever. But they will always ask the question, do you rent or own? And I would always scratch my head. And I say, well, I'm not a renter, but I don't own my home. You know, because I have a mortgage. And I will always like scratch my head. And you can disagree with me. There's nothing wrong with disagreeing. Just be respectful. What I say is not the end all be all. You can disagree. There's nothing wrong with that. But I will always like wonder, like, why would I say I'm a homeowner when I have a mortgage? And I always wondered that. And it didn't. It is, and I agree. It's a trick. Because, as I said, I have a YouTube channel, and some may have watched my YouTube channel, but I said in one of my videos that homeowners do not make payments.
That's right.
Homeowners do not make payments. If you say you have a mortgage, but yet you call yourself a homeowner, what do you call the person that doesn't have a mortgage? Right. I mean, that is true. Right? If you paid off your home and you don't have a mortgage, how is that? And that's a true homeowner. That is a true homeowner. If you have a mortgage, you are a loan owner. You're not a homeowner. Yes, sir.
Well, what if you own your home and you still paying taxes?
That's a very good question. Now, I knew somebody was going to ask that. And that's a good question. You can't, well, now that's a good question. Now, I'm going to say this. The taxes is something we have to pay for the government, right? But if I compare a mortgage to a yearly tax, I'd rather take the yearly tax. Because once you pay off your home, you're going to do everything that you can to keep that home, right? The taxes is nothing compared to the mortgage, It's nothing. But, you know, the government, that's just part of the, you know, program. If you can lose your home if you don't pay your taxes, right? So people say, well, you're never really a homeowner because you still got to pay the taxes. But I would rather pay taxes, an annual tax, compared to a 30-year mortgage or a monthly, mortgage payment. It's nothing in comparison. Nothing. Well, that's utilities. Those are expenses, right?
But like in the sense of like not really like paying it any mind. Like you still have to pay it.
Right.
You gotta pay gas if you want to go somewhere.
Correct. So let me say this. Debt and expenses are two different things. Debt is tied to a loan. Expenses is something that you need to keep your everyday life going. So it's like people that say they rent. People say, well, you're wasting money by renting. Well, I disagree with that. Because if you can show me somewhere I can live for free, then I'm wasting money. But I have to live somewhere. But rent is not debt. Rent is an expense as well. Yes, sir.
Can you speak up a little, please?
Years ago, brother paid his home off. But then they came and took his house away, ground tax.
Yeah. Yeah. Right. 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 So exactly, because the land belongs to, right. But you can pay the ground, and I know this because of Roz. She shared this information with me. I never heard of this until I talked to Roz, because it's not in Philly. We don't have that. I guess it's only in this area, D.C. area, and North Carolina. I didn't know that. But you can actually pay off the ground tax where you don't have to worry about that any longer. But again, the ground tax, that's nothing compared to a mortgage. It's nothing. Yep. All right. I'm going to get one more, then I'm going to go on, then I'll get some others. Go ahead.
I would just like to add, during the process of updating the mortgage, signing the paper,
During the process of paying the mortgage,
updating the mortgage loan,
of getting a mortgage, yes.
loan, you must make sure
Yes.
It's part of the deal. In other words, you're buying a house and land.
And the land, correct.
That has to be done
That's what we
Together.
from the beginning.
Right, exactly.
You don't do that, then money.
Yep.
So that's a must.
Uh,
Make sure that the house
and the land. Right. And again, I never knew about ground tax until I talked to Roz about that. So, but again, with secured debt, these are examples of secured debt. And again, secured credit cards. Is anybody familiar with a secured credit card?
Yeah.
You know what that is, bro?
I think a secured credit card is a credit card you get from your bank. You add your own money to it.
Exactly. So now,
I have one.
you have one? All right. So, and that's exactly right. Secured credit card is a credit card that are for people that have bad credit, right? And I'm not saying you have bad credit. I don't know your status, but it's typically for people that are working on their credit. And
No credit, bad credit.
yes, but exactly. But I'm gonna say this, and as Dre said, you're giving the bank $500, and in exchange they give you a piece of plastic. That's basically it. And you're paying interest
On your money.
on your own money. You're paying interest. That's if you don't pay it off by the end of the month. Yeah, you got to pay it right off.
It works though.
Now, I will say this. I'm sorry.
I did it.
Hold it, brother. Let me go ahead, sister.
So it's essentially like an Amex?
Amex. What's that? I'm not familiar with.
American Express.
Okay. Well, it's not on that level, but it's again with the secured credit cards. Most people that can't get a line of credit from a bank or a unsecured credit card, they want to build their credit. It is a good way to build credit if you have bad credit and you're trying to do something in the future. So if you're trying to do something in the future, whether it's get a mortgage, right? That's about the only way I would advise you to do that. Not to finance a car or anything like that, but if you're trying to get a mortgage, or even if you want to rent and they look at credit score, then if you can't get unsecured, then it's a tool to use to build your credit up. But think about it. You're giving the bank money, your own money that you already have in your pocket, and you're giving them for a piece of plastic, and they charging you for that. So unless you're trying to build credit to get a house, I wouldn't recommend a secured credit card.
Now,
And they charge, exactly. And on your own money. On your own money.
I don't know about that. Look,
Yes, sir.
I'm just saying, like I've done it before. I don't know about the annual fee on your own money.
Some of them do.
But
Yep.
you gotta like look and read about the APR
Right.
and all that. But I did it and I had to put 200, and after a year you got your 200 back,
Right.
and then they offer you a line of credit. So you gotta weigh out your options.
Exactly.
Like what you're willing to do for what your goal is.
Right. And that's what I'm saying. Like, it depends on what you're trying to do. I wouldn't just recommend just getting it just to do it. But if you're trying to, like, if your credit is bad and you're trying to build your credit to get a house, then that might be a route to go. But other than that, I would stay away from it because it's a lot, you do get your money back, but if you got a balance, then you're going to only get the difference from what you gave and what you owe. So it's, but a lot of people do it and they don't know why they're doing it, but the reason why they do it is because they in debt, right?
People don't know why they doing it. They just want a car.
That's true. They just want a car.
Yeah,
And
it's crazy.
but again, home equity line of credit, everybody know what that is? A HELOC. All right, so it's where you take money against the equity of your home, right? And I say that because, see, if I owned the home, I wouldn't need to get a loan on it, right? If it's like I don't get a loan on my money that's in my savings account, I just go to the bank, take my money out because it belongs to me. But I need a home equity line of credit loan because I don't own a home, and I get money from the bank. So Just think about these things. So it's really a second mortgage. That's what it is, a second mortgage. And go ahead. The debt. Think of it like this. If every dollar that you owed was a link to a chain, what would you do to get out of that? Right? You got to, that's how you got to, some people I know say they're going to die with debt, and it's not that so. But I'm going to get more questions. Let me just move forward. All right, so unsecured debt, that's debt that the lender does not require collateral. So credit cards, unsecured credit cards, right, where the bank just gives you money and you pay them back monthly. All right, student loans, personal loans, medical bills, those all are forms of unsecured debt. So as I often say, I'm not against credit card use, but I am against credit card debt. And that's the difference, because a credit card it's a tool, just like a hammer, just like a pencil, just like a lawnmower. I use it when I need it. I use credit cards when I travel, but I already have the money, right? So the same week that I use I don't even wait till the end of the month. I pay it off the same week. I already have the money, right? So just use it for what it is, a tool. But the problem with a lot of people, we haven't been educated. And we think, some people look at it, I got this credit card, this is free money. It's not free money. It's not free money. I have to pay this back with interest. So this is why it's important that, you pay it back. If you use it, have the money, but pay it off by the end of the month so that you don't accrue any interest. Yes, sir.
So, let's say you get a credit card, and they tell you get like a 1%, 2% interest on the money you spend, and you use it and you pay it off in 30 days, and they get at the end of the month they get to like some kind of refund or
Yes. Yep. It's called cash back. Yep.
So do they tax you for that?
No, you still get the cash back on the purchases, the 1%, 2%. You're not like taxed or charged for that. That's like a reward for using the credit card.
But then they're not. But then my thing is, they're not charging me interest on the credit card.
You always get charged interest on a credit card if you carry a debt, if you carry a balance over. But if you pay the balance off, then you're not being charged interest on it. Yep. All right. So they reward, and that's how they lure people in. That's the cheese. So that 1% is the cheese to lure you in. So, but if you do the math, and I'm glad you said that's a good point. If you do the math, if they're charging you, anybody got credit cards in here? All right, good. I have credit cards, right? I have 3, right? One for my personal business, one for my personal life, and one for travel for the church. But that's my own. I use it my own. But I pay all these off. As soon as I spend, I pay it off. How many people know their interest rate on their credit card? Raise your hand. Okay. All right. Good. So if you're carrying over a balance, that 1-2% cash reward don't mean nothing if you got a 29% interest rate. 27.99. So that 1%, 2% cash reward don't mean nothing when you carry a balance and your interest is 27%. Now they don't charge you 27% for that whole month. They split it. That's over the course of the year. All right.
Welcome back. Again, we hope that you enjoyed this information that was shared, and we hope that you found the information helpful and useful. As I always say, before one can invest in something outside of themselves, they must first invest in themselves. So if you're ready to invest in yourself and you're ready to begin your journey on becoming free from the rat race and get off of the rat wheel, come visit me at trufincoaching.com. Schedule your initial consultation so that we can help you to invest in yourself so that you become free to do what you want, when you want, instead of having to do the things that you don't want. Peace and blessings.